And usually, as I mentioned, we usually go on and cover the news, and then from there we go on and move into the charts. And I want to go on and do that because this Monte de Pache news is extremely important, and we'll cover a couple of stories on that. Obviously, we're pushing, because this is certainly giving strength for the dollar, which I'm weighing on the euro, and the breakdown in bonds is giving that impetus that we may get to those elusive levels on the dollar yen. We kept saying, we'd set up a very nice trading short a couple of days ago, which worked out well, but we've been saying somehow, some way, to probably eventually get there to that 1550, which I think is going to get closer to the 1590. But anyway, the euro recovered a foothold on Friday after an extension of the ECB money printing, but the biggest daily loss against the dollar since Britain's vote to leave the EU in June. While the bank said it would reduce the monthly value of purchases, they will continue longer than the market expected and were accompanied by a handful of other measures judged as negative for the single currency going forward. Let's move on down here because I've got some important stuff to cover. The markets have settled down after yesterday's big move, said Adam Cole, head of FX with RBC Capital in London. There are strong arguments for the dollar to keep rising into next year. U.S. interest rates are already far higher than the equivalents in Japan and Europe, and the broader economic policy outlook points in opposite directions. Draghi emphasized strongly the doubts that remain over any pickup in European inflation and growth, and the bank reduced its forecast for inflation in 2018 and said it would still be below its 2% target a year later. A breach of parity remains our call, said Derek Halpenny, European head of global market research for Japan's MUFG in London. There are a number of key elements in yesterday's announcement that makes this a more dovish event than expected, and we believe this reinforces the downside risk for the euro against the dollar. As well as the inflation outlook, he and a number of analysts pointed to changes in the ECB's asset buying rules, which they said put downward pressure on the eurozone short-term interest rates, further weakening the currency's appeal. We'll get into, obviously, like I said, we're seeing the euro even break even lower, and you know that the modus operandus has been, it's 50 pips that really coined that phrase, which is called the Friday flows, and you've heard me mention that a multitude of times over the last few years. So it's, 50 pips is the one that coined that, and you helped me talk about that and explain that, the Friday flows, which are specific to the FX markets. But let's go on and get into the news with the Monte de Pache. One moment. And there's actually a couple of stories, and this is very important because this actually played into what was happening with the Italian referendum last week and what would be basically a hangover should they get a no vote, which is exactly what they got. And this is dripping right into it, so we'll cover this. But this is really important because it's actually certainly impacting the euro. I mean, there's the Friday flows, but we're a little bit overdone. But this Monte de Pache news is really weighing on that. And I want to explain, what the implications are of the story. And I'll make a couple of notes while we go through this. The ECB Supervisory Board meets again on Friday to discuss Monte de Pache Siena's request for more time to raise capital, with banking sources saying its members are split over the decision. Should the ECB reject the extension, the Italian government is expected to intervene to recapitalize the country's third largest bank to avert the risk of being wound down. Such a move to pump in state cash could happen within days. Banking and government sources say the Tuscan leader has asked the ECB to give it until January the 20th from previous year-end deadline to try to wrap up a privately backed €5 billion rescue plan that was thrown into doubt by Prime Minister Matteo Renzi's defeat in the referendum and subsequent resignation. Italy must come up with a quick resolution to avoid the crisis at Monte de Pache, threatening the savings of thousands of retail investors and spreading across the widening banker sector. But the power vacuum created by Sunday's vote is not helping. See, one of the things, and we'll cover the other story, but there was a consortium of banks led by J.P. Morgan, I think it was 10 banks altogether, that were looking to go in and put in $5 billion, basically to shore up Monte de Pache's situation. but that was predicated on the a yes vote for the referendum that would keep Matteo Renzi still in power. Once that was pulled out, that's what's going to raise the doubt. So that's why it's kind of funny. It's funny how markets don't pay much attention to things. So obviously we saw the big sell-off in the euro on Sunday, and then we saw, which I was looking for, a 38% correction, maybe even really more than that, in the dollar, which we did see. Obviously now that's been wiped out. We even exceeded that 38% correction intraday and then came back below. But you still had to weigh the overhang of that, because there was if they get the no, and you saw that story I tweeted out from the Peterson Institute, but with Pedro da Costa interviewing the other gentleman, that there was going to be a big overhang with the Monte dei Paschi news. But on Monday and Tuesday and Wednesday, nobody gave a rat's about that news. Okay, now that the ECB surprised, because I didn't expect them to extend. You can quibble about, well, they're extending, but they're not as much. Hey, look, the market didn't care about that. But as we roll into Friday, the Monte dei Paschi news is what's really weighing on the market, and that never went away. You see what I'm saying? That was always going to be a drag. So when we were making those runs and we got really overdone on Tuesday, it was like, there's no way in hell I thought that we were going to go, up to nearly the 38% within that time frame. And the market was just chomping at the bit to go even higher. But the market was completely ignoring that this was overhanging the market, and it wasn't going anywhere. You see what I'm saying? We'll go into further details about this for those that aren't as familiar with this. I've been following this story for the last couple of years, actually 3 years, but it's really the roosters have come home to roost, and there's really no way to get around this. Okay. Anyway, a financial crisis in the Eurozone's third biggest economy would also risk creating contagion across Europe, a region already reeling for Britain's decision to leave the EU. Renzi quit on Wednesday, and a new government is expected to be appointed in coming days, but most parliamentary factions are pushing for an early election in a few months' time. A long meeting on Thursday of the supervisory board of the ECB, the Eurozone's banking supervisor, could not agree on what to do with Monte dei Paschi's request for extra time. A source close to the matter said some members of the board were pushing to reject the request so that the Italian government would have to act immediately to save the bank, rated the weakest lender in a European stress test this summer. That was no surprise. We always knew that was going to fail. But if the ECB were to reject the extension request, it would be left exposed to accusations that it's effectively pulling the plug on the lender by undermining the credibility of its rescue plan and potentially triggering a deposit outflow. And that's been the concern, that this could eventually go where investors start drawing their money, and then it just basically feeds on itself. Reminds you of the Christmas movie with Jimmy Stewart, It's a Wonderful Life, and everybody starts running to the bank. And right now we're breaking into lows in the euro. But it's important to know what's driving this and what could prompt maybe a pullback or pop back in the opposite direction, maybe even as early as Monday. But it said other members of the ECB think that the central bank should not directly respond to Monte dei Paschi's request, but talk to the Italian government first. This would buy Rome a bit more time to pass a decree authorizing precautionary recapitalization of the lender, including measures that would help other Italian banks. However, Renzi's outgoing government is unlikely to want to pass such a decree because under EU rules, state intervention would entail losses of the bank's junior bondholders. It may therefore be necessary to wait for a new administration to be appointed, which could happen on Monday. The reason that this is key is because the bank's junior bondholders are retail investors who were conned into buying the bonds. Okay, and they were telling them, hey, this is great, you can make more money buying this. So these retail investors ended up buying the bank's bonds, and now they're underwater big time. Like, they're valued now at about half of what they're worth. So if this were to take place, this could actually potentially even wipe out those bondholders, or take even further severe losses. Why it makes the story so complicated, and why the euro is so low at this time. Either way, the state intervention is increasingly likely as the bank's hopes of pulling off the private rescue plan are fading. Investment banks that must decide whether to back that cash call, led by JP Morgan and Mediobanca, are due to hold talks on Friday after putting the deal on hold this week. Investors include the Qatar Investment Authority, which would inject €1 billion in the bank, are reluctant to commit money until they know which government will succeed Renzi and whether there's a real possibility of running elections. Opinion polls put the anti-establishment five-star movement neck and neck with the center-left party. Here's the deal. Now, there's going to be even more problems if these guys get into power, which could end up being prompted because obviously that's part of what was happening, why I kept thinking people were crazy thinking there was going to be a yes vote, because people were really pissed off, especially the ones that were these retail investors that were already pissed off because there's been so much corruption in the Italian government for not years, but literally decades. But these people were already getting screwed, so there was no way that referendum was going to get a yes, and that's why you saw such an unbelievable, outstanding participation in the election. I think it was 70% or something like that, the most you've seen in decades, because those people were pissed off. And that opens the door for the five-star movement to potentially get into power on these early elections, which would then cause a lot of concerns down the road for the whole European situation. Now, moving back on to here, we'll look at this and see where this places us then. And like I said, the euro is tugging at new lows. That's nothing new. We've talked about the 568 being a bias pivot on the 30-minute. So let's see. Rome Brussels have a tough time. Will have to get tough if they want to save money. De Pache, the Sienese lender, has been a serial pest for almost a decade. Blah 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 blah. We already know that, but here's the deal. Rome's problem is that the recent no vote in a national referendum on constitutional reform has upended plans to find €5 billion of private investment to plug Monte Pache's capital hole. Here's the crazy thing is, I thought it was just crazy. I thought that the dollar would get a 38% correction. I was saying that last week. But what I couldn't understand is how they could run the euro up there to, to the 38% correction at the time, which is almost at 108. Obviously, we went even higher. And nobody was paying attention that this problem was going to come. It actually had already put them on hold. And any upside was going to be limited in the euro. You see what I'm saying? It's just like the market was completely ignoring this on, I can understand Monday, but on Tuesday and Wednesday, just completely ignoring this as if it wasn't going to come home to roost. And it was coming home to roost while the rally was happening. But that's why we're going lower. But anyway, over half of the $3.3 billion of euros of subordinated balance outstanding, which are the ones that would be wiped out first, are held by retail investors. This would cause a political stink. We've already said that. It's the retail investors that got screwed on this deal. So it's like I said, it's a wonderful lot. There's a concern that you're just going to see an outright straight up bank run. Italy has tried a host of workarounds early this year. It has healthier domestic banks to pay into a fund called Atlas that would take stakes in weaker bonds that undermined the system and was in any case inadequately sized to tackle Monte dei Paschi. Following the referendum, options include a loophole in the European Union fine print that might let it suspend bail-in rules or using €2 billion of state money to buy retail investors' bonds for cash. So that's essentially, this is where we find ourselves right now, a difficult situation, and it looks only to go on to get worse. Here's one of the bigger problems right here is on this whole deal with the $5 billion. Monte dei Paschi reckons its tangible book value on its restructuring value would be €9 billion. If the bank could fetch a market capitalization of half that, there would be €4.6 billion to share. Take off €2 billion for retail investors and a further $1 billion pledged to bondholders who exchanged their paper in an earlier offer, what's left of €1.6 billion. That value would have to be shared between €1.3 billion of the remaining junior debt holders and the providers of €700 million of new cash. But what they were saying is, that's what the book value, the 50% of the book value, but if it's 40%, that basically wipes everybody out. So it's just a really bad situation. We'll go into economic reports, see what we got cooking for today. So we have a preliminary University of Michigan, and prior was 91.60. They're looking for 94.5. And we're going to get into the charts. So the reason that I wanted to spend more time on that Monte dei Paschi story is because that's what's driving the euro this low at this point. I mean, I thought, like, when we came down here, I thought we'd probably find some support, and after the show, I was able to scalp around and make a few nickels, and we played this relatively well after all this. Once I was able to get off the webinar. And I'm even surprised. Like I said, we had some support down here. It actually bounced off in Asia trading, bounced off the support as we made a dip towards that 78%. But now we've rolled over, and the reason we're getting this rollover is people are on pins and needles on this Monte dei Paschi news. And the ECB Supervisory Bank Board, they're basically kind of stepping away, and they're kind of half of them want to give Monte dei Paschi the extra time, which they had to have the situation resolved by year end, and that consortium of 10 banks led by JP Morgan was prepared to go and inject the 5 billion euros, but that was, as I said, predicated on the thought that Renzi we would get a yes on the referendum. Obviously, he staked his claims on that, so by him resigning, which he did, that just throws things in a more calamitous situation, which now they put their thoughts on the situation of their bid on hold, and now they're meeting to see what they want to do, and we've just discussed what are the different alternatives that they can go with. We've talked about this 568 being very key here as far as the bias pivot, okay? And we had seen that move. We saw those moves previously last week. Now we're back here. Here's the problem also is that, you know, after we took out the here, and this move really surprised the hell out of me. This part of this, not the bounce. I mean, well, I was looking for a 38%, but this move right here, beyond this area, really surprised the hell out of me, and then we turn around, we're still holding up relatively well, because that Monte dei Paschi news was still, crap was going to hit the fan this week. It wasn't like as if it was going to be resolved, because with Renzi gone, that took away JP Morgan and these other banks being willing to go and step in. Now, we got the surprise announcement, because like to me it was a surprise. I didn't think that they would extend. But here's the reason why they extended, and we were wondering if they do extend, it's because of this, which really just accelerates these losses. There's no way I saw that they would extend because you're using all your bullets. But the concern was if they don't, then we could really see a big pressure being weighed on with the situation with Monte dei Paschi. Well, it didn't even make any difference, because now, like I said, once people get that in their minds, is that there's panic in the streets. Like I said, want to recall that same movie, the It's a Wonderful Life. Even though, you know, in the story, the guy's trying to explain to the people, hey, look, your money's fine in the bank. It's in so-and-so's house. When we built his house, the people didn't care. They want their money. You know what I mean? Even though, like I said, when they saw the bank runs in the other places, they're like, I don't care. I want my money. I want my money out of the bank. And so with this Monte dei Paschi, now everybody's like, they're essentially running for the hills, and no one really knows how that's going to play out. And also, it didn't help that the ECB Bank Supervisory Board, they're basically standing back from this. And part of the reason they think that it's a good idea to stand back is really to get Italy to step in. But once again, it's a lot of problems because of the bail-in rules, and what if you wipe out the junior? If that happens, when the state comes in, essentially you could almost wipe out the junior bond holders, which are the retail investors that got screwed on this deal and got conned. It's just a very complicated situation. So there was no way they were going to ever vote yes for the referendum. But the thing was, is you almost cut your nose off to spite your face by voting no. But I think the people are so pissed off that they were going to vote no anyways. But that leaves us where we're at, and the problems with Italy have been going on, and the problems with Monte dei Paschi have been going on for some time. So now there's no way to get around this at this point, and now the market's really scared. We'll have to see where we can go. Actually, to be honest with you, we could get a point where it just starts just tumbling, but I think somehow, some way they're going to, like they said, they may allow a special set of rules to allow Italy to come back in, and I think they're going to try and avoid a panic. Because obviously you're going to have a lot of problems across the Eurozone, like they said, on top of what you've already seen with the concerns with the Brexit weighing on the Eurozone. Now you have this even weighing on further sentiment. It's just going to go. It just sets itself up for a tough move. The thing is if they are able to somehow get things straightened out on Monte dei Paschi, make some decisions over the weekend, that could allow a relief rally in the euro. But it's still tough sledding. We'll go into the 30-minute to get a little bit closer look. Okay, and here we are. Like I said, we've talked about the significance of this 568, and this is where the market is rested. You can see how they took this dip in here into the Asian session, and we worked ourselves way back, back here, up to the 633 we were talking about. Me and some of the fellows were talking about this yesterday in the morning when we got into single digits. We were talking about that being a good area as a scalp, and any moves up here towards the 633. That's going to be probably as good as it gets, because we were talking at the time about the bonds and how the bonds were just sitting there and saying, hey, look, the euro can't rally if the bonds aren't going to go anywhere. And we're looking at opportunity for the bonds to go on and weaken at that time, and we're paying close attention to the gold market and saying, look, if the bonds start to break, it doesn't look like it's going to happen in this session. We think it's going to break in the Asian session. And as we broke, sure enough, it sent the gold market reeling. Came into some good support to 61%, and we'll get to that once we get past the break. But that's where all this is developed, and this right now is all about Monte dei Paschi, and that's why we wanted to go in and cover that closely at the time. We're going to go in and take our break now. We're going to stick to the same format that Blake uses when he takes his breaks. He takes his break about this time, and we'll go in and jump back. And when we get back, we'll go in and take a look at what's happening with the euro. And the euro is already above 115 now at this point. And like I said, the bonds are weaker, although they're holding up near these lows. But this whole situation, which you could see, more of aggressive run the dollar is really fueling the dollar yen at this point. Obviously, we'll take a look at the euro, but like I said, this is all about the Monte Paschi that is actually affecting the dollar across the board. But we'll go in and take our break. When we get back, we'll take a look at the rest of the majors. And we'll be back in just a bit.